Have you ever placed the perfect trade only to exit too early out of fear? Or watched your profits disappear because you held on too long, driven by greed? Maybe you felt the sting of a loss and jumped right back in, trying to win it back, only to make things worse. You're not alone. These aren't strategy problems. They're mental game problems. And if you don't fix them, no amount of technical skill will save your account. What you're about to hear isn't another motivational talk. It's a guided journey into the mental game of trading, drawn from years of experience and from the lessons of performance coach Jared Tendler, who's helped elite traders, poker players, and athletes master their emotions and perform under pressure. He doesn't give hype, he gives structure. He shows how to overcome fear, greed, and tilt, so you can trade with control instead of chaos. Take a deep breath, because this might be the turning point in your trading journey. Most traders spend years searching for the perfect strategy. They tweak indicators, study price action, and backtest data until dawn. All of that matters, but it isn't why most traders fail. Failure doesn't happen on the chart. It happens in the mind. It happens in that tiny moment when you hesitate, even though the setup is perfect. When you cut profits too early because you fear a reversal. When you overtrade after a loss, desperate to get even. Tendler says it simply: trading is a performance activity. You are the performer. And your mind is either helping you or sabotaging you. That's why mindset is your real edge. Think about it. Everyone sees the same charts and reads the same news. The difference between consistent winners and repeat losers isn't information. It's control. It's the ability to stay calm under pressure, to follow your plan when your brain screams to do the opposite, to walk away after a stop loss instead of forcing revenge trades. Trading exposes your psychology the way heat exposes flaws in metal. If you fear loss, the market will show it. If you trade from ego, the market will crush it. If you can't regulate emotion, volatility will devour you. That's why this approach is different. It doesn't tell you to just be disciplined. It teaches a structure for mental toughness, the same structure world-class performers use. And it begins with one shift. Your emotions aren't enemies. They're feedback. That fear before clicking buy might be telling you you're risking too much or that you don't truly trust your system. That frustration after a losing streak might reveal you're too attached to short-term results. That overconfidence after 3 wins could be warning that you're about to break your rules. Emotions aren't problems to suppress. They're signals to interpret, just like the market. Ignore them and you ignore data about yourself. Most traders either ignore emotions or react blindly to them. They let fear paralyze them. They let greed drive them. They let tilt take over. Then they blame the system, the market, or the news. Anything but the real culprit. An untrained mind. In sports and poker, mindset training is mandatory. Athletes train their focus. Poker players rehearse emotional discipline, but traders think they can skip it. And that's why they lose. Mental mistakes follow patterns. If you can track those patterns, understand their causes, and train new responses, you can transform the way you trade. This isn't about being emotionless, it's about being emotionally intelligent. The best traders still feel fear and greed, they just don't obey them. They pause, they breathe, they decide. They review themselves, not just their charts. They treat trading like performance, because it is. Every entry is a test of discipline, patience, and clarity. If those muscles aren't trained, no strategy can save you. So ask yourself now, how much time have you spent building your system compared with building your psychology? Do you journal your emotions after trades? Do you know your triggers and blind spots? If not, you're not broken. You're simply untrained. And that's what this work will change. Because once you understand that mindset is a skill you can build, everything becomes lighter. You stop fighting yourself. You stop repeating the same pain. You start trading with calm consistency. Over time, you develop what Jared calls stable confidence, the quiet certainty that doesn't rise with a win or collapse with a loss. That's the goal. Not perfection, preparation. The market will test you every day. The question is, will you react like an amateur or respond like a pro? The first step is awareness. Before you can change anything, you must see it clearly. That means learning to map your emotional patterns. Most traders think their emotions are random. One day they're calm, the next they're anxious, then overconfident. But emotions follow structure. They rise and fall in the same sequences like repeating chart patterns. Mapping is how you expose those loops. It's the process of observing how you think, feel, and behave before, during, and after a trade. It turns invisible emotion into visible data. Imagine you keep hesitating to enter good setups. You tell yourself it's caution, but deep down you know it's fear. When you start writing down what happens, what you felt, what you thought, what you did, you begin to see the cycle. Maybe hesitation always comes after a loss. Maybe it appears when the trade size feels large. Maybe it spikes when you're tired. Suddenly, what felt random now has cause and pattern. And if you can see the pattern, you can interrupt it. The rule is simple. What's tracked becomes understood. What's understood becomes controllable. Start with 3 questions. What triggers strong emotion in me? What thought follows immediately after? What action do I take? Write it down after every trade, even when you feel neutral. Over time, you'll find clear themes. Fear before entry, greed after wins, frustration when you miss moves. You'll see your own mind's fingerprints on your P and L. When those patterns are visible, they lose power, because now they live on paper, not in the shadows. And what's visible can be changed. Most traders believe the enemy is the market. It isn't. The real enemy is unseen emotion, fear, greed, tilt, hesitation, self-doubt. You can't out-discipline them if you don't understand them. That's why mapping is the foundation of all mindset training. It's not glamorous, but it's transformative. It replaces shame with curiosity and confusion with clarity. It's how you start managing yourself like a professional. Once you have a few weeks of data, you'll notice that certain mistakes repeat with eerie consistency. Maybe you always overtrade after winning days. Maybe you cut profits too soon after a big loss. Maybe your first trade of the week is always impulsive. Each of these loops is a thread leading to a deeper cause. The surface behavior isn't the disease, it's the symptom. To fix it for good, you must find the root belief that feeds it. This is where the real work begins, because the problem isn't that you feel fear or greed. Those are normal human emotions. The problem is what those emotions mean to you. Surface fixes, like telling yourself to stay calm, or repeating affirmations, only trim the leaves. The root still lives underground, and until you dig it out, it will keep growing back. So take one recurring mistake, the one that costs you most, and trace it down. Ask yourself, what emotion drives this? Fear, shame, pride, desperation, frustration? Then ask again, why do I feel that? Keep asking why until you reach something personal, not technical. Maybe you realize you fear losing because you tie your worth to your results. Maybe you hold losers because admitting defeat feels like failure. Maybe you overanalyze because you're afraid of looking foolish. When you finally touch that root, the pattern starts to weaken. Because awareness changes the meaning. You stop seeing trading errors as proof that you're broken. You start seeing them as messages from deeper beliefs that need rewriting. It's uncomfortable, but it's real progress. The goal is not to suppress the emotion, it's to understand it so well that it no longer tricks you. Once you know the root, you can start building counter-evidence. If you fear losing means you're a failure, remind yourself that even the best traders lose daily. If you think missing a move means incompetence, record the dozens of perfect setups you did take. Evidence dismantles illusion. Each time you act from understanding instead of reaction, you rewire the loop. Slowly, the trigger loses intensity. What once sent you spiraling now becomes a signal to breathe. That's how you begin turning emotion from enemy to ally. You realize that fear isn't trying to destroy you. It's trying to protect you from pain. Greed isn't evil. It's an over-amplified desire to win. Even tilt is just frustration looking for release. When you meet these emotions with awareness instead of resistance, they calm down. From here, you'll move into the next layer of this journey. How to recognize and manage the 2 strongest emotions that shape every trader's life: greed and fear. They're the twin engines that drive both success and destruction. Learn to control them, and everything changes. Greed. It's a word traders throw around lightly. I got greedy. Don't let greed ruin the trade. But what is greed really? And why does it seem to sneak in right after confidence finally shows up? Most people think greed is just wanting more money. But in trading, greed runs deeper. It's not about wealth, it's about control. It's about wanting to feel certain in an uncertain world. It's the hidden wish to make the market obey you. Sometimes greed comes disguised as ambition. It says, jerk is just one more trade. It says, hold it a little longer, you can squeeze more. It says, you're on fire today, double the size. And before you know it, that voice has led you off plan. Greed doesn't always shout. Sometimes it whispers. It shows up after wins, when confidence swells into overconfidence. It shows up after losses, when desperation dresses itself as hope. It shows up when you feel pressure. Pressure to prove yourself, to hit goals, to make the month look right. Underneath greed is often fear in disguise. Fear of missing out. Fear of not making enough. Fear that if you stop now, the opportunity will vanish forever. That fear drives chasing, overtrading, ignoring stops. When greed takes over, logic fades. You stop trading your plan and start trading your emotions. You start negotiating with your own rules. And in those moments, discipline evaporates. The brain on greed behaves the same way as a brain on adrenaline. Dopamine surges. You feel powerful, invincible, alive. That rush can be addictive. You start chasing the feeling instead of the setup. Greed is not just about money. It's about validation. You want the market to confirm you're good. You want proof you belong here. So you push and push until the market teaches humility again. Here's what it looks like in action. You're up for the day. You've hit target. Then you think, just one more. That one more turns red. Now you're angry. You open two more to make it back. They fail. Suddenly your calm green day is a red spiral. You don't understand how it happened, but it started with one sentence. Just one more. To manage greed, you have to map its triggers the same way you mapped fear. Ask yourself, when do I get greedy? After a win? After a loss? When I see others post profits? When I'm tired? When bills are due? Track it. Notice the physical cues, racing heart, faster breathing, the sense that you must act right now. Those are your early warnings. Once you feel them, pause. Take a breath. Say out loud, this isn't part of my plan. Predefine everything before you enter. Entry, stop, target, size. When the plan is written, emotion has less room to bargain. You've already made the decisions while calm. Cap your session. Set a maximum number of trades or a daily profit target after which you must stop. Discipline limits opportunity, but it protects consistency. You can't eliminate greed, but you can give it structure. You can contain it. You can reframe it. When you feel the rush, shift focus from I want to win more to I want to execute better. Make execution your reward. Let precision replace excitement, because the real profit comes from consistency, not intensity. Some traders manage greed with partial profits, taking a piece off and letting the rest run to plan. Others set alarms or reminders with quotes that anchor them. Whatever method you choose, the goal is the same. Interrupt the emotion before it changes your behavior. Remember, wanting to grow isn't wrong. Ambition builds traders. But when ambition turns into compulsion, it destroys them. Greed's voice will always be there. Your job is to listen without obeying. You'll know you're improving when you can feel the urge to chase and still stay still. That moment, when emotion rises and you don't react, is strength. That's growth. Greed is the push that takes you beyond balance. Fear is the pull that holds you back. One makes you reckless, the other makes you hesitant. Learning to regulate both is the essence of mastery. Next, let's look at the other half of that equation, fear. Because while greed urges you to do too much, fear convinces you to do too little. It's quiet, convincing, and it sounds like caution. But under the surface, it can paralyze your potential. Fear, the silent twin of greed. If greed makes you chase, fear makes you freeze. It stops you before you even begin. Fear is not weakness. It's not lack of courage. It's the mind's natural reaction to uncertainty. In the real world, fear protects you. It keeps you alive. But in trading, fear becomes distorted. Because the market is uncertainty, every candle, every tick, every day. You can't remove uncertainty from trading. You can only learn to operate inside it. Fear in trading takes many forms. Fear of losing, fear of being wrong, fear of missing out, fear of repeating past pain, fear of failure. Each one looks different on the surface, but they share one core root: discomfort. with not knowing. The human brain wants control, but trading offers none. So it invents ways to cope. Hesitation, overanalysis, micromanagement, all attempts to create fake control. Think about how fear shows up for you. Maybe you hesitate to pull the trigger, waiting for the chart to look perfect. Maybe you take profits too early because you don't want to see a winner turn red. Maybe after a losing day, you avoid setups that are actually valid just to protect yourself from feeling more pain. That is fear's strategy, protection through avoidance. But avoidance kills growth. It trains your brain that safety lies in inaction. And that's how traders slowly shrink. To understand fear, you must map it like any other emotion. Ask, when does fear appear? What does it feel like? What thoughts come with it? What actions follow? The patterns will be there, just like always. Maybe fear spikes right after a big loss. Maybe it shows when your trade size increases. Maybe it hits hardest after success, when you suddenly fear giving it all back. Fear is a shapeshifter. Sometimes it disguises itself as logic. You say, I'm just waiting for confirmation, but really, you're stalling. You say, the setup doesn't look clean, but really, you're afraid to fail again. You don't fix fear by pretending to be fearless. You fix it by accepting risk completely. Before you enter a trade, say to yourself, this trade can lose, and that's okay. Say it until you believe it. Because when you truly accept loss as part of the game, fear loses its leverage. That's not recklessness. That's awareness. It's the quiet strength that comes from facing reality instead of fighting it. Create a pre-trade checklist to anchor you. Ask, is this setup valid by my rules? Is my position size correct? Is my stop loss in place? If yes, then your job is done. The outcome is out of your hands. That simple checklist builds trust. It tells your brain, I've done my part. Fear also fades when you lower risk. If fear overwhelms you, reduce your size. Don't step out of the market completely. That reinforces the fear. Just scale down until emotion becomes manageable. Then build confidence again slowly. Visualization helps too. Before your session, close your eyes and picture yourself entering calmly, holding trades to target, accepting loss with grace. You're rehearsing confidence under pressure. When the real trade happens, it feels familiar. Real example. A trader used to cut his trades the moment they turned green. He called it locking in profit. But in truth, he was afraid of regret, afraid of watching profit vanish. He wasn't scared of losing money. He was scared of feeling stupid. Once he saw that, he created a new rule. He had to hold at least 80% of every trade until his plan said exit. At first, it hurt. Then it became normal. Soon, his winners doubled. That's how you train courage, through repetition, not inspiration. Fear will never disappear. The goal is not to eliminate it, but to act correctly despite it. Courage isn't lack of fear. Courage is doing what's right even when fear whispers no. You'll know you're improving when you feel fear rise and still click buy, according to plan. When you can watch a candle turn red without panic. When you stop needing to be right and focus on being consistent. Fear can become your teacher. It points to areas where trust is missing. Trust in your edge. Trust in yourself. Trust in the process. Each time you meet fear with awareness, that trust grows. And the stronger your trust, the quieter fear becomes. There's a saying among professionals. Amateurs trade results. Pros trade process. Fear lives where process is weak. Build a strong process and you build a shelter against fear. When greed pushes, fear pulls. Tilt is what happens when they collide. Tilt is the emotional explosion after the internal war, the moment when logic leaves and emotion takes the wheel. That's what we'll look at next. You've been there before. A small loss that shouldn't have mattered suddenly feels personal. You clench your jaw, mutter under your breath, and open a new position too soon. Then another. Before you know it, the day is ruined. That emotional storm has a name. It's called tilt. Tilt is when emotion hijacks logic. It's when anger, frustration, or shame take control of your decisions. You stop trading the market and start trading your feelings. It's not just reckless, it's destructive. Because once tilt begins, it feeds itself. A loss triggers anger. Anger drives revenge. Revenge causes bigger losses. Bigger losses cause shame. And shame fuels more anger. It's a loop that can destroy your account and your confidence in a single session. Tilt doesn't come out of nowhere. It builds slowly, like pressure in a pipe. Each frustration, each small mistake, each unfair stop-out adds a little more tension until something snaps. You might not even notice it until you're already inside the spiral. That's why awareness matters so much. You need to learn to spot tilt before it explodes. Here's what it often looks like. You take a loss that feels unfair. Maybe you were stopped out by 1 pip and the market runs in your direction right after. You feel cheated. Your mind says, "I'll get it back." That's the first spark of tilt. Or maybe you made a mistake, entered the wrong lot size, missed a setup, or moved your stop. You feel stupid. You feel the need to prove yourself again. That's the second spark. Or maybe you followed every rule perfectly and still lost. You feel the market owes you a win. That's the third spark. When any of those happen, you're no longer fighting the market. You're fighting yourself. Tilt feels powerful at first. Adrenaline floods your body. Your vision narrows. Your breathing shortens. You feel alive, focused, ready to strike. But what feels like clarity is actually tunnel vision. You're not seeing opportunity. You're seeing emotion amplified. Tilt takes many shapes. There's revenge tilt, chasing losses with reckless entries. There's mistake tilt, punishing yourself with bad trades. There's injustice tilt, blaming the market, the broker, the spread. There's entitlement tilt, thinking you deserve a win after losing. And there's despair tilt, when you give up completely and start gambling. All of them share one emotion, anger at losing control. To master tilt, you need to know your version. Ask yourself, how does my tilt start? What does it feel like? What's the first thought that appears? Write it down. Maybe you feel heat in your face. Maybe you tap your leg or breathe fast. Maybe your thoughts become aggressive. Those are early warnings. Catch them early, and you can still stop the spiral. Here's a simple rule. When emotion rises fast, pause immediately. Don't click anything. Don't open new trades. Don't argue with yourself. Stand up. Take a breath. Leave the screen if you can. Even 60 seconds away can save your day. Use a short mantra to reset. The market doesn't owe me. Revenge is not a strategy. Process over outcome. Say it out loud. Your own voice cuts through the mental noise. If the anger feels too strong, walk away completely. 10 minutes, drink water. Breathe deeply. Let the chemicals in your brain settle. Then review what happened on paper, not in your head. Tilt survives in chaos. It dies in structure. The more you document it, the less control it has, because writing creates distance between you and the emotion. Here's a real example. A futures trader kept blowing his account after big losses. He'd double size immediately, telling himself he was fixing the mistake. But all he was doing was amplifying tilt. We made one change. If he lost more than $300 in a day, his session ended. The next trade was forbidden until the next morning. Within 2 weeks, tilt vanished. He didn't need a new system. He needed a stop button for his emotions. Another trader tilted silently. No anger, no shouting, just numbness. After mistakes, she entered random positions, disconnected, like a robot. That was despair tilt. The solution wasn't toughness, it was compassion. She started recording short voice notes describing how she felt after losses. Hearing her own words helped her reconnect. The spiral stopped. Tilt doesn't disappear forever, but you can reduce it. With awareness, you shorten its lifespan. Instead of lasting hours, it lasts minutes. Instead of ruining the day, it becomes a moment of reflection. Tilt is proof that you care. You're not broken because you feel it. You just need systems to protect yourself from yourself. When you manage tilt, you protect your confidence and your discipline. And those two qualities, confidence and discipline, are the foundation of long-term success. Without them, every strategy crumbles. With them, every setback becomes temporary. So take this as a reminder. The goal isn't to be emotionless. The goal is to be aware. Awareness gives you choice. Choice gives you control. And control gives you consistency. Once awareness becomes habit, something deeper begins to grow. Confidence. Not the loud kind that boasts after a win, but the quiet kind that stays steady after a loss. Confidence is the foundation of every professional trader. It's the belief that no matter what the market does, you can execute your plan with calm precision. It's not arrogance, it's not ego, it's self-trust built on evidence. Most traders confuse confidence with results. When they're winning, they feel unstoppable. When they're losing, they doubt everything. That's fragile confidence, confidence tied to outcome. Real confidence is tied to process. It survives both profit and drawdown. Confidence cracks when you stop trusting yourself. Every time you break your own rule, you send your mind a message. I can't rely on me. Do that enough, and hesitation becomes your new normal. To rebuild self-trust, start small. Keep simple promises to yourself. Follow your plan for one session. Record every trade. Stop at your limit. Each kept promise is a brick in the wall of confidence. Each broken one removes a brick. Confidence isn't built in a day. It's built one disciplined decision at a time. It's evidence that you keep your word. There are 3 pillars that hold confidence steady: competence, emotional control, and process orientation. Competence means you know your system because you've tested it. You've seen it win and lose, and you know its probabilities. That data becomes proof that your edge is real. Emotional control means you can feel fear or greed without letting them drive you. You've learned to breathe through discomfort instead of reacting to it. You can trade while nervous and still execute properly. Process orientation means you judge success by execution, not profit. You ask, did I follow my plan? Instead of, did I make money? That one shift keeps confidence stable even when the P and L swings. When you rebuild confidence, review every trade the same way. Did I act according to plan? Did emotion interfere? If yes, what was the trigger? You're training your mind to link pride with discipline, not dollars. Confidence grows when you see yourself act correctly under pressure. It's like a muscle that strengthens through repetition. You don't need perfection. You need consistency of effort. Some days that means reducing size to protect your calm. Other days it means taking a valid setup even though you're scared. Both are wins because both reinforce trust in yourself. A trader once told me, I'll feel confident once I stop losing. But that's backward. You stop losing consistently only after you build confidence. Because without confidence, you hesitate, you cut early, you skip trades, you sabotage execution. Confidence doesn't follow success, it creates it. To track progress, keep a confidence journal. At the end of each day, rate your confidence from 1 to 10, then write one reason why. Was it discipline, preparation, emotional control? Over time, you'll see patterns. What builds confidence and what destroys it. Also, record your wins the right way, not the money wins. The behavior wins. Held full position to target. Followed stop even when it hurt. Ended session on schedule. Reading these lines later reminds you that you can rely on yourself. Avoid common traps. Ego confidence, believing you're invincible after a streak. Borrowed confidence, depending on mentors or chat rooms to validate decisions. False confidence, mistaking luck for skill. Collapsed confidence, giving up after one bad day. All of them crumble because they depend on external factors. True confidence comes from competence, control, and process. It's grounded, not inflated. It's quiet, not loud. It's patient. And it doesn't need the market's approval. Confidence also means knowing what you don't know. It's humility. It's trusting your data more than your feelings. It's saying, I don't know where price will go, but I know exactly how I'll respond. That's real power. When your confidence matures, losses stop feeling like attacks. They become feedback. Wins stop feeling like validation. They become confirmation. Your emotional line flattens, and your results start to stabilize. That's when trading starts to feel different, calmer, cleaner, simpler. But confidence alone isn't enough. You need something to protect it, because even the strongest confidence can crack under pressure if discipline isn't there to guard it. Discipline is the armor that keeps confidence alive, and that's what we'll explore next. Discipline is the armor that keeps confidence alive. Without it, confidence becomes fragile, easily cracked by emotion or temptation. With it, even a small edge can survive any storm. Discipline isn't punishment. It's protection. It's the bridge between intention and execution. It's what allows you to act according to your plan instead of your feelings. Most traders say they lack discipline, but that's not entirely true. You already have discipline in parts of your life. You show up to work, you care for your family, You follow through on commitments. So, it's not that you can't be disciplined. It's that your trading discipline hasn't been trained yet. Discipline means following your plan even when it hurts. It means obeying your rules especially when breaking them feels easier. It's a decision repeated so many times that it becomes instinct. Let's look at why discipline fails. Usually it's not because of laziness. It's because of three simple causes. 1. Your rules are vague. If your plan says, wait for confirmation, what does that actually mean? Vague rules invite negotiation. Your brain will twist them in the moment to justify impulse. 2. You haven't tied discipline to a deep reason. If your only reason for following the plan is to make money, emotion will always win when money feels urgent. You need a deeper purpose: freedom, mastery, peace, legacy. Discipline powered by purpose endures longer than discipline powered by pressure. And 3. You rely on willpower instead of systems. Willpower is like a battery. It drains fast. Systems are like power lines. They deliver steady current. To strengthen discipline, you must build systems that make obedience easy and disobedience hard. For example, use a checklist for every entry. If it's not a 10 out of 10 setup, it doesn't get traded. Set alarms for breaks and session ends. Predefine loss limits that auto-stop you for the day. These rules aren't cages. They're guardrails that keep you on the road. After each session, grade your discipline, not your profit. Ask, did I follow my rules? Did I stop when I said I would? Did I let emotion lead? Score yourself honestly. That scorecard builds accountability, the foundation of consistent improvement. And remember this truth. Lack of discipline doesn't just cost money. It costs confidence. Every broken rule is a promise broken to yourself. And every kept rule is proof that you can trust your own word. Discipline also has a rhythm. It grows through repetition, not motivation. You can't expect to feel inspired every day. Some days you'll feel tired, frustrated, even doubtful. That's when discipline matters most. It's the quiet choice to do what's right even when it doesn't feel right. Think of discipline as muscle memory for the mind. The more you repeat correct behavior, the less effort it takes. At first it feels forced. Then it becomes natural. Eventually it becomes identity. You stop saying, I try to be disciplined. You start saying, I am a disciplined trader. That's when the fight ends. Because identity doesn't require debate. It's who you are. When you break discipline, and you will, the key is recovery speed. Don't waste hours beating yourself up. Acknowledge it immediately. Pause trading. Write down what triggered it. Reaffirm your commitment. Return when your mind is calm. Forgive yourself quickly, but never ignore the lesson. Discipline is not perfection. It's persistence. It's falling off track and climbing back sooner each time. It's building reliability so strong that emotion can't shake it. And here's something most people miss. Discipline creates freedom. When you follow your structure, you don't have to overthink. You don't argue with yourself. You execute. Rules don't limit creativity. They give it direction. A trader without rules drowns in choices. A disciplined trader flows. If you ever doubt discipline's value, remember this: one undisciplined day can erase 10 good ones, but one disciplined day can save a week from ruin. Build your structure. Protect it. Live inside it. Because without it, even the strongest mind will drift. Discipline is the armor. It guards your confidence. It preserves your edge. It allows your process to work. It's what separates professionals from hopefuls. And yet, even the most disciplined traders face moments when emotion strikes mid-trade, when fear, greed, or tilt hit in real time. That's where we go next. How to manage yourself in those critical seconds when everything starts to slip. How to correct your mind in real time before it costs you everything. Disciplined traders face moments when emotion strikes mid-trade, when logic begins to fade, when the screen feels louder than reason, when you know what to do but your hands move faster than your mind. That is the true test of mastery. Because discipline is built before the trade, confidence is built over time. But control, real control, happens in the moment. That's why you need a system for real-time correction, a sequence you can follow when your brain starts to spin. Here's how it works. 4 simple steps. Recognize, disrupt, reinforce, refocus. The first step is recognition. You can't fix what you don't see. So, train yourself to catch the earliest signs that your emotional state is shifting. It might be a faster heartbeat, a tight chest, a rush of thoughts, a voice in your head saying, "I need to get this back," or "Don't miss it." The earlier you notice that shift, the easier it is to stop the spiral. Once you recognize it, disrupt it. Do something physical to break the momentum. Take a deep breath. Stand up, stretch your hands. Look away from the screen for a few seconds. Click a pen, anything that interrupts the emotional loop, because emotion builds through momentum. Breaking that momentum resets your brain. Next, reinforce. Replace the emotional narrative with a trained one. Use short, strong phrases, anchors you can believe in. Say them out loud if you can. For example, "The market doesn't owe me. My job is execution, not prediction. One trade doesn't define me. Revenge is not a strategy. The next trade starts clean." Your own voice cuts through noise faster than thought. It tells your brain who's in charge. Then, refocus. Once you've interrupted the emotion and reinforced calm, turn your attention back to process. Open your checklist. Ask, "What's my next valid step?" Review your criteria. If no setup is present, walk away. If it is, follow the plan exactly. You're not fixing the last trade. You're performing the next one correctly. Recognize, disrupt, reinforce, refocus. That's your real-time correction loop. Repeat it until it becomes second nature. You can even design your own version. Create a one-page sheet with your triggers, your physical cues, your anchor phrases, and your refocus steps. Keep it near your monitor. When stress hits, you won't have to think. You'll have a plan. Here's what it might look like. Trigger. After a loss, I feel angry. Signal. Heat in my face. Urge to click. Disruption. Stand up, breathe 3 times, step back. Reinforcement. Revenge costs twice. Refocus, review checklist, wait 10 minutes, or maybe this. Trigger. After a win, I feel invincible. Signal. Smiling too much, scanning charts fast. Disruption. Drink water. Stretch. Reinforcement. Process over profit. Refocus. Write in journal before next trade. You're teaching your mind to shift from reaction to response. At first, it will feel slow, then natural, then automatic. And this system doesn't just save trades, it saves confidence. Because every time you catch yourself mid-emotion and recover, you strengthen trust in yourself. You prove that you can handle the storm. The goal isn't to never feel emotion, it's to respond wisely when emotion hits. The same way a pilot doesn't panic in turbulence, he follows procedure. That's how traders must act under pressure. You can train it the same way pilots do, through repetition. During your review sessions, imagine stressful moments. Visualize yourself catching emotion early, disrupting it, reinforcing calm, refocusing on your plan. The more you rehearse, the faster your mind responds in real time. This loop turns awareness into action. It's your mental emergency checklist. Use it whenever you feel control slipping. Some traders even use cues, a sticky note with one word like breathe or pause, a ring or wristband they touch when emotion spikes. These anchors bring the brain back to the present moment. Remember, emotion moves fast, logic moves slow. You'll never outrun emotion with thought alone. You must intercept it with action. Every time you do, you're rewiring your brain. You're teaching it that calm is possible even in chaos, and that lesson compounds over time. You'll start noticing something new. The gaps between emotion and reaction grow wider. Your decisions slow down. Your breathing stays steady. You act, not react. And that's when consistency truly begins. But the mental game doesn't end there. Because even with awareness, even with discipline and correction, you'll still face moments when progress stalls. You'll hit what Jared Tendler calls the breakthrough wall, that frustrating plateau where nothing seems to improve. And that's what comes next. The breakthrough wall, that frustrating plateau where nothing seems to improve. You're doing everything right, journaling, following rules, managing emotions, yet progress stalls. You feel stuck between knowing and doing. That's the moment most traders quit. But it's also the doorway to your next level. Jared Tendler calls this the breakthrough phase. It's where surface work ends and deep rewiring begins. It's where the game moves from behavior to belief. See, when you start trading, your biggest challenge is emotional reaction, fear, greed, tilt. You learn to manage them with awareness and correction. But eventually, those same emotions return in new forms. That's not failure. It's feedback. It means your system has improved faster than your beliefs. Maybe you still believe losing means you're a failure. Maybe you still attach your worth to your results. Maybe you still think control equals safety. Those beliefs live deep in the subconscious, and when your new habits challenge them, they push back. That resistance is the wall, and the only way through it is truth. You can't outdiscipline false beliefs. You must expose and replace them. Start by asking hard questions. What am I really trying to prove with my trading? What emotion am I avoiding when I break rules? Why do I need to win so badly? What would it mean about me if I failed? Don't rush the answers. Let them rise naturally. Write them down. You might find that your drive to trade perfectly comes from a childhood fear of punishment, or that your refusal to take losses stems from years of needing approval, or that your obsession with results hides a deep insecurity about self-worth. Trading doesn't create these wounds. It reveals them. The market is a mirror that reflects what's already inside you. When you heal the root, the symptom fades on its own. One trader I worked with hit this wall hard. He knew every rule, every system, every technique. But every time he took a loss, rage followed. He wasn't angry at the market. He was angry at himself. We traced it back to years of being told mistakes were unacceptable. Losing felt like failing as a person. Once he saw that, he rewrote the story. He learned to see losses as tuition, not punishment. And slowly the anger vanished. That's the power of breakthrough. It's not about learning something new. It's about unlearning something false. You start to realize that emotional mastery isn't the absence of feeling, it's the presence of understanding. You stop seeing setbacks as flaws and start seeing them as feedback loops. You stop judging yourself and start studying yourself. And that shift changes everything. This stage takes patience, because belief doesn't change overnight. You're literally retraining your identity. You're teaching your mind that it can be safe even when it's uncertain, confident even when it's wrong, calm even when it's losing. Use your journal like a mirror. Each day, after your trades, write not just what happened, but what you believed during it. I believed I had to get it back. I believed the loss meant I was careless. I believed I was due for a win. When you see those beliefs on paper, they lose their grip. You can challenge them with truth. I don't need to get it back. I need to follow my edge. One loss doesn't make me careless. It makes me human. The market doesn't owe me anything. Replace illusion with evidence. Over time, the mind adapts. Beliefs update like software. And when that happens, trading feels lighter. The noise quiets. You stop fighting yourself. You start flowing with the process. You trade not to prove something, but to express something. That's what professionals mean when they say trading becomes effortless. It's not that emotion disappears. It's that self-resistance ends. Eventually, everything integrates: psychology, process, identity. You think clearly, feel calmly, act decisively. You recover faster from mistakes. You stop chasing perfection and start mastering presence. That's what real breakthrough looks like. Not fireworks, not celebration, just peace. The kind of peace that comes when you finally trust yourself. But even when you reach this level, you must maintain it. Because mastery fades without maintenance. You still review. You still journal. You still train awareness. The difference is, now it's no longer work. It's who you are. You wake up knowing that discipline isn't a rule, it's a reflex. Confidence isn't a feeling, it's a foundation. And the mental game isn't a challenge, it's your edge. That's when trading transforms from a struggle into a craft. And every day in the market becomes a chance to refine that craft a little more. You've walked through every stage of the inner journey. You've seen how awareness turns chaos into clarity. You've learned that emotions aren't enemies, they're signals. You've discovered that fear, greed, and tilt can be understood, mapped, and mastered. You've built confidence that doesn't depend on winning. You've forged discipline that doesn't need motivation. You've created systems to correct yourself in real time, and you've faced the breakthrough wall that every serious trader eventually meets. Now you stand at a new beginning, because trading mastery isn't a finish line. It's a rhythm, a continuous cycle of awareness, reflection, and refinement. The mind you bring to the market each morning decides more than any indicator. If you bring chaos, the market will mirror chaos. If you bring calm, the market will mirror calm. You don't control the price, but you control the person clicking the button. And that's everything. Look back for a moment. Remember how you started, chasing setups, reacting to every tick, judging yourself by each win or loss. Now see where you are, observing, planning, executing, letting the market do its part while you focus on yours. That's transformation. That's growth. That's the real edge. Your awareness is your first tool. Your structure is your shield. Your discipline is your anchor. Your calm is your weapon. The market will still test you. There will still be days that shake you. There will still be losses that sting. But you'll respond differently now. You'll breathe. You'll observe. You'll remember that one trade means nothing in the long game. You'll remember that your goal isn't to win every battle. It's to stay in the war long enough to master yourself. Professional traders don't chase perfection. They chase presence. They understand that mastery is built not on excitement but on repetition, quiet, steady repetition of correct behavior. They respect the market, but they trust themselves more. Each session is another rehearsal, each decision another chance to prove reliability to yourself. That's how confidence compounds. That's how stability is built. Keep journaling. Keep observing your emotional patterns. Keep refining your systems. Never let ego replace curiosity. Never let frustration erase patience. And never forget why you started, to build freedom, not stress, to build mastery, not chaos. There will come a day when you enter a trade and feel nothing, no rush, no panic, just flow. You'll execute, manage, and exit with calm clarity. You'll close the chart and walk away, knowing you acted with integrity. That's when you'll realize you've won the only battle that matters, the one within. Trading is not a fight against the market, it's a dialogue with yourself. The market speaks in price, you answer with discipline. It tests your patience, your confidence, your humility. Each candle is feedback. Each loss is information. Each win is proof that preparation works. So when you sit at your screen tomorrow, breathe deeply and remind yourself, this is not chaos. This is training. Every moment, every tick, every decision is sharpening your edge. You are no longer the trader you once were. You've learned to recognize your emotions, to interrupt them, to learn from them. You've turned reaction into reflection, reflection into understanding, and understanding into control. That is mastery. Carry that calm into everything you do, because the mental game isn't just for trading, it's for life. The same awareness that protects your capital will protect your peace. The same discipline that guards your strategy will guard your character. And the same confidence that steadies your trades will steady your future. So here's the truth, the one lesson that will outlive all others. The market does not reward brilliance. It rewards execution. And execution begins in the mind. Stay aware. Stay disciplined. Stay patient. Trade with clarity. Trade with control. Trade with respect for the process. And every time you open the charts, remember this. You are not here to predict the market. You are here to master yourself. Because when the mind is steady, the trade takes care of itself. And that begins every day before the first candle moves. How you think in the quiet hours will decide how you act in the chaos. The mental game is not won in the moment of the trade. It's won in preparation. Every professional knows that structure creates freedom. They don't sit down and see what happens. They start with intention, clarity, and limits. They know exactly what qualifies as a setup and exactly what disqualifies it. That precision protects them. If you've ever felt overwhelmed by the market, it's not because the market is too big. It's because your plan is too vague. Vagueness is emotional fuel. It creates room for hesitation, second-guessing, and impulse. Clarity kills emotion. Write your rules so clearly that your future self has no room to argue. Before every session, define your edges in plain language. What does a valid trade look like? What time frames will you respect? Where will you stop? When will you walk away? Put it all on paper. When uncertainty rises, paper beats panic. Your brain craves certainty. When it can't find it in the market, it searches for it in behavior. That's why consistent habits calm the mind. The routine becomes the anchor. Even small rituals, lunch, cleaning your workspace, opening your journal, taking one slow breath before placing a trade, remind your brain that you're in control of the process, even if you can't control the price. Never underestimate the power of small acts of order. They're like mental stop losses against chaos. Here's a simple rule that can change everything. Don't start a session until your mind is quiet. If you feel distracted, angry, or desperate, walk away. The market will still be there in an hour. Your capital will too. But your mindset may not. You are the instrument. If the instrument is out of tune, the trade will sound off, no matter how good the song. Make peace with missing trades. You don't need to catch everything. You just need to catch the right things in the right state. The discipline to do nothing is one of the hardest skills in trading, but also one of the most profitable. A professional knows when not to play. An amateur plays because silence feels uncomfortable. Every day you trade, remember this truth. You're not here to win today. You're here to build the kind of trader who can win for years. That means each session has a purpose beyond profit. It's practice. Practice for focus. Practice for patience. Practice for recovery. Each trade, win or lose, adds data to the map of who you are becoming. At night, review not just what you did, but how you felt. Did you start calm and end anxious? Did you start confident and end reckless? Those emotional arcs matter more than your entry points. Because long-term success isn't about finding better setups. It's about creating a better you. The markets will always evolve. Strategies will come and go. But the skill of awareness, the ability to stay composed while uncertain, that will serve you forever. Keep training it the same way an athlete trains reflex. The repetition builds automatic calm. When volatility spikes, you'll breathe while others panic. When noise rises, you'll focus while others chase. That's the difference between a trader who reacts and one who responds. Reacting is emotional. Responding is intentional. One drains you, the other sustains you. Build mental conditioning into your day like a workout. 5 minutes of breathing, 10 minutes of journaling, 10 minutes reviewing your trades with no judgment. It doesn't sound like much, but over months it reshapes your nervous system. You'll notice less panic, faster recovery, and more balance. Treat your mental state like capital, because it is. Every impulsive decision spends it. Every moment of calm compounds it. The richest traders aren't just rich in money, they're rich in focus. So protect that focus as if it were your account balance. When you feel emotional, take a break. When you feel tired, stop. When you feel reactive, breathe. The market doesn't pay for effort. It pays for execution. And execution only happens when your mind is clear. Over time, this mindset becomes your greatest edge. Not the indicator, not the analysis, not the system, but the inner stability that allows those tools to actually work. Because a mind that is calm can use any strategy. A mind that is chaotic will destroy every strategy. The goal isn't to find certainty in the market, it's to create certainty inside yourself. The calm trader wins not because he knows the future, but because he's unshaken by it. That's mental conditioning. That's mastery in motion. It's not built from what you do once. It's built from what you do every day, especially when no one is watching. Most traders chase results, but the masters chase rhythm. They know that consistent behavior creates consistent performance, and consistent performance eventually creates consistent profit. It's cause and effect, not chance. The best way to keep that rhythm alive is through reflection. Reflection is the bridge between experience and growth. Without it, lessons disappear as quickly as they arrive. At the end of each day, take time to debrief yourself. You're not just reviewing trades, you're studying behavior. You're learning the language of your own psychology. Ask simple, powerful questions. What did I do well today? Where did emotion interfere? What mistake repeated itself? What emotion drove that mistake? What can I do differently next time? Don't write essays, write truth. Honest, simple truth. For example, I hesitated because I didn't trust my setup. Or, I overtraded because I felt pressure to recover. Or, I broke my rule because I was tired. That honesty is where growth begins. Over time, your journal will show you patterns clearer than any chart. You'll see cycles of behavior, the emotional seasons of your trading mind. You'll know when you're in flow and when you're drifting. That awareness lets you correct before chaos starts. Reflection is also where compassion grows. Too many traders treat themselves like enemies. They curse their mistakes, insult themselves, spiral into guilt. But guilt doesn't teach. Observation does. Forgive quickly, learn deeply, move forward. A mistake doesn't mean you're weak. It means your system met a limit. Your job is to find that limit and extend it. The market doesn't punish you for mistakes. It simply exposes them. And once exposed, they can be fixed. This is the quiet truth of trading psychology. Growth feels uncomfortable because it's proof you're stretching beyond old beliefs. Every time you resist emotion instead of obeying it, you're building new mental muscle. It's invisible progress, but it's the most important kind. Celebrate that invisible work, because it's what will sustain you when results fluctuate. Here's something powerful to remember. Most traders fail not because they lack intelligence, but because they lack self-honesty. They lie to themselves in small ways. This loss doesn't count. I'll just make it back. I know I broke the rule, but it's fine. Those small lies build big problems. Truth, even when painful, builds stability. So build a habit of radical honesty with yourself. Write what actually happened, not what you wish happened. That's how you stay grounded in reality, and reality is the trader's only friend. Reflection also prepares you for adaptation. The market changes, volatility shifts, trends evolve. But when your process is rooted in reflection, you adjust naturally. You're not attached to being right, you're attached to learning, and learning traders always outlast guessing traders. Every Sunday, take a deeper review. Look at your week as a story. What was the theme? Patience, impulse, discipline. Rate your execution, your emotion, your focus. Then set one goal for the next week, not 10, just one. Something specific, measurable, and internal. For example, I will take only setups that meet all three confluences. Or, I will pause for 10 seconds before every entry. Or, I will stop after 2 emotional trades. Small goals compound faster than big dreams. As the months go by, reflection turns into wisdom. You begin to sense emotional patterns before they fully form. You notice temptation earlier, frustration sooner, fatigue faster. That's awareness operating in real time. You no longer need constant motivation because you've built momentum. You don't chase discipline. You live it. You don't need to find focus. You've become it. Reflection transforms experience into mastery. Without it, time just passes. With it, time refines you. So take your journal seriously. It's not a record of losses, it's a record of becoming. One day, you'll look back through those pages and see the story of your evolution, the story of how a reactive trader became a calm professional. You'll see the progression not in money, but in maturity. And that's the kind of growth no drawdown can erase. Remember this, your trading journal is not for judgment. It's for truth. It's your map back to clarity every time chaos returns. Each note you write, each emotion you name, each lesson you capture, they're all seeds. And over time, those seeds grow into awareness so strong that it becomes instinct. You'll reach a point where you no longer have to force calmness. It will arise naturally. That's when you realize that emotional control isn't something you do, it's something you've become. Growth in trading isn't always visible. It's not just bigger profits or fewer losses. Sometimes it's smaller reactions. Sometimes it's faster recovery. Sometimes it's knowing when to stop for the day and walk away in peace. These quiet victories are invisible to the world, but they are the foundation of greatness. Understand this. You are training 2 traders at once. The one on the screen, your technical self, and the one in your head, your mental self. The technical trader studies charts, the mental trader studies emotions. When both evolve together, you become unstoppable. If one grows and the other doesn't, imbalance forms. That's why traders who know everything about strategy still lose. Their knowledge outpaces their self-awareness. Their mind becomes the weakest link. So each time you study price action, also study yourself. Each time you backtest a system, backtest your reactions. Ask, how did I feel under pressure? How did I behave under stress? That's data 2, the most important kind. You can't control the next candle, but you can control the next thought. And that one thought often decides whether you'll follow your plan or break it. Never underestimate the power of one calm breath in a chaotic moment. It sounds small, but it can change the entire trajectory of your day. That breath interrupts tilt, That breath buys time. That breath gives clarity space to return. Your emotions aren't flaws to erase. They're signals to interpret. If you feel fear, it might mean position size is too big. If you feel greed, it might mean you're attached to the outcome. If you feel frustration, it might mean your expectations were unrealistic. When you treat emotions as data, they lose their sting. You start seeing them like indicators, not right or wrong, just information. And like any indicator, emotion must be analyzed in context. Don't react instantly, interpret patiently. Here's a mindset shift that changes everything. You're not trying to control emotion, you're learning to cooperate with it. Emotion isn't a storm to fight, it's a signal to read. And once you learn to read it, it becomes guidance instead of distraction. The best traders aren't calm because they feel nothing. They're calm because they understand everything. They've seen their emotions enough times to know what each one means. That's why emotional intelligence is your real edge. Not intelligence about markets, but intelligence about yourself. It's what allows you to act with precision in uncertainty. Keep reminding yourself your mind and your account are connected. Every emotional decision leaves a financial footprint. Every act of awareness adds equity to your future. Emotional control is financial control. Think about it. If discipline saves one bad trade a day, that's 5 a week, 20 a month. Over a year, that could be the difference between surviving and thriving. The math of mindset is exponential. So, invest in your psychology like you invest in your strategy. Study it, practice it, respect it. Because the trader who understands his own mind never truly loses. There will still be tough days, red weeks, losing streaks, doubt. Those are not signs of failure. They're signs of pressure, and pressure builds strength. When frustration comes, don't run from it. Sit with it. Ask, what is this trying to show me? Usually the lesson is deeper than you think. Maybe it's patience. Maybe it's humility. Maybe it's time to rest. Trading will keep testing you until you learn the lesson it's offering. That's how it shapes you. Every challenge is a chapter in your personal development. When you stop resisting the lesson, the pain reduces. Because pain is just resistance to growth. You'll reach a point when your emotional storms don't scare you anymore. You'll still feel them, but you'll know they'll pass. You'll know how to anchor yourself until calm returns. And that knowledge is freedom. That's when you realize trading wasn't just about markets, it was about self-mastery. The charts were just mirrors reflecting your evolution. Each loss taught awareness, each win taught humility, each challenge taught balance. You entered trading to make money, but if you stay long enough, you'll stay to master yourself. And that mastery will start to spill into everything else, your relationships, your mindset, your life. Because how you do one thing is how you do everything. When you trade with awareness, you live with awareness. When you learn to stay calm in the market, you learn to stay calm in life. And that is the ultimate return on investment. Because trading is a mirror. It reflects your fears, your habits, your beliefs. Every emotion that appears on the chart already existed in you. The market just brought it to the surface. That's why this journey transforms people far beyond money. When you start to master your reactions on the screen, you also begin mastering your reactions in everyday life. You stop rushing decisions. You start observing your impulses. You become more patient, more deliberate, more grounded. The same awareness that saves your account begins to save your peace. That's why mindset isn't just a trading skill, it's a life skill. It teaches you how to think clearly when emotions are loud. It teaches you how to recover when life tilts against you. It teaches you how to lose gracefully and win humbly. That's what makes great traders rare. They are built on principles that apply everywhere. When you live in awareness, small things stop controlling you. You don't overreact to market noise, to people, to problems. You see situations as they are, not as your fears project them to be. That's true freedom, not financial, but emotional. So treat your trading like a daily meditation. Each session becomes a classroom where you study yourself. Each emotion becomes a teacher. Each challenge becomes a lesson in self-control. It's not about escaping difficulty. It's about learning to stay steady inside it. The goal is not to avoid pressure. It's to perform under it. Pressure reveals truth. It shows you how much preparation you've done and how much more is needed. Most people collapse under pressure because they've never trained for it. They avoid discomfort, so when it arrives, it overwhelms them. But you're different now. You practice discomfort daily. Every time you face a losing streak with patience, you're training resilience. Every time you resist a revenge trade, you're strengthening emotional discipline. Every time you stay calm while others panic, you're becoming the kind of trader who lasts. Resilience is built in the moments you want to quit, but don't. Those small victories shape the foundation of your long-term success. There's a difference between motivation and mastery. Motivation pushes you when things feel good. Mastery keeps you moving when things feel heavy. And the only way to reach mastery is to fall, get up, and keep refining. That's what separates temporary traders from timeless ones. Timeless traders don't chase excitement. They chase endurance. They know that surviving long enough to learn is the real edge. Because consistency is built through years of repetition, not moments of luck. So protect your longevity. It's your most valuable asset. Take breaks when your mind is tired. Respect rests the same way you respect entries. You can't think clearly on an exhausted brain. Rest is part of discipline, not a reward for it. Many traders burn out because they think effort equals success. But trading rewards clarity, not exhaustion. The clearer you are, the better you perform. The calmer you are, the longer you last. You can only sustain discipline when your energy is balanced. So build balance into your lifestyle. Eat clean. Move your body. Sleep deeply. Your brain is your tool. Sharpen it through self-care. A tired trader sees danger everywhere. A rested trader sees opportunity. The difference isn't skill, it's state of mind. Remember this, trading doesn't demand perfection, it demands presence. Your only job is to show up as your best self today. Not flawless, just focused. And if you fall short, that's fine. You review, you adjust, you come back stronger tomorrow. This journey never ends. Even the best traders still make mistakes. They just recover faster because they've trained the mind to respond, not react. They've built systems around their psychology. And those systems protect them when emotion tries to take control. You now have those same tools. Awareness, structure, reflection, discipline, recovery. If you keep using them, they will guide you through any market, any phase, any storm. And here's the beautiful truth. When your mindset is stable, you stop fearing uncertainty. You stop chasing control. You start flowing with probability instead of fighting it. You become aligned with the game instead of at war with it. You realize trading is not about winning all the time. It's about surviving long enough for your edge to play out. And the only way to survive is to keep your mind healthy. Every trade you take is a mirror. Every reaction, a reflection. And every calm decision is a small victory that compounds into mastery. That's how great traders are built. Not through secrets, but through awareness practiced daily. You are not just learning the market anymore. You're learning yourself.